Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia, and this evening once again I'm joined by my brother and partner at As Good as Gold.
Thank you, Darryl.
Brian, and tonight we have a very, very special returning guest. He is the founder and general manager of Matterhorn Asset Management in Gold, Switzerland. He is an absolute icon in the precious metals industry. I speak of none other, of course, than the incomparable Egon von Greyerz. Good evening, Egon.
Good evening, Egon.
Thank you very much for that introduction, and good morning to you.
Egon, look, it's been a long time since we spoke last. A few months. And as my father would say, a lot of water has flown under the bridge in that period of time. And indeed it has. Look, I'm looking at the world at the moment, and I don't think I'm probably seeing it a lot differently to you. I'm seeing it in a very, very precarious place. We've got debt, like at debt levels we've never seen before. Inflation, and the true inflation figures aren't being presented by, governments around the world, of course. Wars, we're talking plural here. Donald Trump, who was nearly assassinated, and there's just so much happening in the world at the moment that, as I said, I think we're in a very vulnerable space. I know that Gerald Celente, and I have an enormous amount of respect for Gerald, he's viewing it at the moment as the coming of a second depression. And he cited the number of corporate businesses that have gone into liquidation in the last 6 months, the first half of the financial year. And it's 346 major corporations that have declared bankruptcy. And this is the biggest amount since 2010, the first half of 2010. So signs are not looking good for business generally. So I'm just sort of thinking that we could tip over the edge any moment. So I'd be interested to know how you're viewing the vulnerability of the world at the moment. And are we, in your opinion, or could we be heading into a second Great Depression?
Well, I would say that you ain't seen nothing yet. Basically.
Right, okay.
And I have to add to that the timing of these things is very difficult, as we know. I mean, I saw the risks already 25 years ago and prepared for that by setting up or buying gold for ourselves and a few friends that we co-invested with already in 2002, more or less, when the market had bottomed and started coming up again. Of course, things have happened since then. We had a 2007 to 9 or 6 to 9 crisis. We had a few since then. But nevertheless, central banks and governments have been very skillful in feeding the world with unlimited amounts of fiat money. And to my surprise, it's worked. This bubble has just grown bigger for the last 20 years or so, or certainly since 2008, which is what 16 years, which is quite amazing. So therefore, I've stopped trying to forecast timing. So I'm really only looking at risk rather than timing. And I would say the risk is now unprecedented. You were talking about here debt to GDP, global debt to GDP. Global debt is about 350 trillion. Global GDP is about $100 trillion. So that's the 350%, basically. We have had many papers on that debt to GDP, and if it goes above 100, it's considered to be risky, very risky. But at 350, it's a risk that will lead to a catastrophic fall of the world economy and of the financial system, in my view. But as I said, I stopped saying when, and therefore, yes, of course, Gerald Celente, who is a great guy and a friend and a very good forecaster too. he's right in his what we call second depression. It depends on when you start. We've had many, because the world has always gone into depressions after eras like this. But yes, it will happen, and I think we are near, definitely. And you see it with the amount of, especially political unrest that's happening in the world now. You're just looking at, I mean, Europe. There's not a leader that has been or will be re-elected, for example, and the same in the U.S. now, and the same in most countries. And I often look back at previous periods of downturns, because as we often say, history tells us everything, although today's politicians always believe it's different today because they live today and therefore they can do something about it. Well, nobody can do anything about this bubble. It doesn't matter who becomes president in the US or who becomes president of France, or and now we have guaranteed solution in the UK with a new Labour leader who will definitely destroy the economy very quickly, and he's starting to do it already. By spending more, giving more of handouts, and starting to nationalize things, railways, etc. So we know that's going to be the trend. Now, you take the Roman Empire, and you take the 3rd century in the Roman Empire. That's when the currency really started falling, between 180 and 280 AD. And it basically fell almost 100% now, which means that the silver content of the denarius, the Roman coin, fell to virtually zero from 100%. And then in the final 30 years of that the crisis of the 3rd century, there were 50 leaders of Rome, mainly assassinated, and some were killed in battle, and some were pushed out. During 30 years, there were 50 people coming and going very quickly. Most of them are going in a very unpleasant way. That's effective. What I'm saying is that political unrest is part of this end of an era that I think we're in. End of an empire also. This is the US empire, which is primarily a financial empire, not a geographical empire, but nevertheless, it is the end of an era, and of course, not just the US, but also the West. And of course, the West will just follow the US. So far, they have no strength of their own, and not even in political decisions. Whatever the US decides, whether it is sanctions against Russia, or whether it's FATCA, financial regulations, or whether it's attacking Iraq, just the rest of the West agrees, so the West, the rest of the West, outside the US, is not independent. No, it's like colonists, I call them. So you see it, and then you have the decadence also, and the migration. I know I'm including a lot of things in this answer to your first question. But also you look at what's happening with the decadence. You're looking at what's happening with migration. You don't have that to the same extent in Australia, but you look in America, you look in Europe, and you look at in the centers of major cities now. You don't recognize people anymore. The Merkel opened up the borders in Europe, and America's borders have always been a bit open, but now, of course, since Biden took over, the wall is down or open, and everybody comes in. Nothing wrong with migrants. The world consists of migration throughout history, but in the past, migrants took care of themselves, built their own lives. Now most of them are getting handouts, and the countries who are receiving these are not can't take care of them. There's not schooling, housing, etc. So some groups would always create problems, and so that's. And then crime, of course, is going up dramatically everywhere. So that's, and then yes, of course, the bankruptcies that you're talking about. That's nothing compared to what's going to come. The leverage we have in this system, as I said, 350% of GDP. That leverage, and that excludes derivatives, and I think derivatives could be up to 2 quadrillion or something, because a lot of that will become debt because they have to be saved, these banks. So the risks are enormous, and that's what we should look at, and that's what we are looking at, and that's what we're doing. We try to help the people who want to listen by preserving part of their wealth in precious metals, gold and silver. So a long answer to your question, but really the problems at this point are insurmountable. Doesn't matter whoever comes into power, nobody can do anything about it. And I think that the time when you can still postpone this for longer period by printing more money is coming to an end also, because of the money will U.S. will have to print more than ever now in the next few years because of their deficits and the various problems they have. Nobody wants to buy U.S. treasuries anymore.
Correct. Yeah.
So they can't be financed. Only the Fed can buy them. If you print your own debt and then buy your own debt, that's a banana republic, of course.
Yes.
So that's where the world is going, and especially I'm talking about the Western world, because the East is probably going to get over the coming crisis. They will have one too. China will have one too, obviously, with their massive debt also. But they will sort that out domestically. They're not dependent on international financing to the same extent, although they are dependent on international trade, of course, and that will suffer. But I expect the East and the BRICS to do better, because many of them are commodity countries, than the West, who will be in a now terminal decline for a very long period, in my view.
Yeah, because it's interesting. Your reference to all of it was interesting, but your reference there to Rome, and they went through the same experience, and I could imagine a Roman general transferring a bag of what appeared to be gold to the supplier of armory, say, for example, and the person who was receiving the gold would look at it and say, doesn't look like the gold that I used to know. And so they had what was it, Gresham's law, where they'd drag out an original gold coin and compare it to what they were receiving in payment and say, don't want to deal with this anymore. This isn't the real thing. And so refused to trade. And that's exactly, of course, what's happening with BRICS. I mean, you reach a point where they say, we don't want to trade in US dollars anymore. We want to use our own currency or gold. So this period can stretch out considerably, but the longer it runs, the worse and more dire the end result becomes. And that's really where we're heading now. I mean, history tells us about 100 years, isn't it? But for this to happen, and we're about there. I mean, America took over the mantle in 1918. Well, where are we? 2024, it's 105 years. Yeah,
exactly. So
you want to say something?
No, I wasn't. No, just let you state the facts.
But that's what it is. That's how it works, isn't it, Egon? So it's just history repeating itself.
What I didn't know was there 50 assassinations or thereabouts in that period of time. In Roman in the Roman days, and so therefore we'll probably see a few more, unfortunately, Darryl.
Well, there was one attempted, wasn't there?
One attempted.
Yeah. Just recently.
Yeah.
You take the Weimar Republic, for example, in Germany in the early 1920s. Again, a lot of political murders there. So when there is economic pressure and human pressure there for people are having problems surviving financially, then there are more political unrest, which we're seeing already everywhere. Seeing it. You said there's not a statesman in the world. We talked about this before. There's not a single statesman.
No,
and therefore, the ones who are elected are powerful the cause. This is what you to be expecting in this kind of era. You don't get any top people who are going to lift the countries and conquer the problems. They will just take it down, and this is why. And a good example of the Labour leader. Who will just spend more money and incur more debt And the same will whoever comes to power in America, Democrat or Republican. They do the same. They'll promise more, and they will make less tax revenue. Whether that's Trump or Pamela Harris, whoever it is, it won't make any difference.
Yes. Yeah. No, I'm sure you're right. I've got whenever I think about the vulnerability of the world and the financial crisis that we're confronted with, I think of Jim Sinclair, or the late Jim Sinclair, who used to always say, become your own central bank, own gold. And so I want to spend a little bit of time on this because there's a report from the World Gold Council that I think is worth sharing with the viewing audience. A pretty powerful stuff with reference to where or who's buying gold at the moment and why they're buying gold. So interestingly enough, gold is up this year in US dollars just under 20%. It's 19.69%. Which is, if it continues to perform at that rate, and it's very likely that it will or better, you're talking 40% for the year.
Well, what it really means is the US have obviously printed 20% more money.
Oh, that's what it means, pretty much. But so let's just have a look at what the world, I want to read it as it is written. This is from the World Gold Council 2024 Central Bank Gold Reserves Survey. It goes on to say, the 2024 Central Bank Gold Reserves Survey by the World Gold Council provides significant insight into the buying intentions and perspectives of central banks, which have been the primary price setters of gold bullion since the third quarter of 2022. The WGC, World Gold Council, survey reaffirms that central bank reserve managers plan to increase their gold holdings further. This is a really important point. They haven't stopped. They're going to increase their holdings of gold. They cite gold's role as a long-term store of value and inflation hedge, its strong performance during times of crisis, its function as a portfolio diversifier, and its immunity to default risk. The WGC survey indicates that these results occur against a backdrop of geopolitical tensions, including the Middle East, the Russian-Ukraine war, and US-China trade tensions, and macroeconomic stress factors, including high inflation and uneven global growth. Now, there's a lot of reasons here to buy gold, and this is why the central banks of the world are buying it. These combined geopolitical and macroeconomic concerns are reflected in interest rate levels, inflation concerns, and geopolitical instability within the WG survey. Now, I know it's a bit long-winded, but it's important that I think people know who's buying gold and why they're buying gold, which leads to why they should be buying gold. It goes on to say, central banks view gold as a strategic asset. That doesn't surprise me,
no.
but they've acknowledged this. The WGC survey since 2019 shows that central banks continue to manage their gold reserves separately from other reserve assets. From 2019 to 2024, an average of 78% of respondents managed gold reserves separately. However, the rationale for doing so has changed considerably, with gold reserves increasingly regarded as a strategic asset. In 2019, this is really interesting, only 15% of central banks considered their gold reserves a strategic asset. By the 2024 survey, this number has risen to 71%.
Massive increase.
Huge. Both advanced and EMD economies, emerging economies, face growing concerns about managing their reserve assets including geopolitical uncertainty, financial stability, default risk, long-term store of value, portfolio diversification, performance during times of crisis and liquidity. Consequently, both groups now regard gold as a strategic asset. Understandably so. So my point here, I mean, if they think gold is that good and they're buying tons of it and increasing their holdings all of the time, why wouldn't we emulate that?
Yeah, but why would it?
It's a matter of education. You've got to know, you understand the reasoning behind this.
Why wouldn't the head of the family do the same thing?
Correct.
Yeah.
So, your thoughts, Egon?
Yes, I have a lot of thoughts on what you just said. Firstly, of course, central banks they like heads of the central banks or chairman of the Fed or even governments. They haven't got a clue about anything. So that's why they all sold most of their gold in the 90s and at the end of the 90s down to very low levels, and that was the case for many countries. UK is a good example, and the Gordon Brown low, and Switzerland also got rid of a lot of its gold, which is quite amazing at the time, and now. So they didn't understand the value. They rather have the money and earn a return on the money. The fact that, as we all know, currencies have gone down by 98.5% since on average, including the dollar, since 1971. You know, they didn't remember that. Well, so it is a strategic asset. They're now starting to realize that. But there's another factor that is more important, and that's one of the reasons why it's happening. Also, is that especially since the freezing of the Russian assets and now with the confiscation so far of the return on those assets for the Ukraine war, which is absolutely crazy in my mind. You steal from one for another to have more weapons, and that confiscation is now leading to central banks at last realizing that why should we hold dollar assets in a currency that's going down rapidly? Well, so is everybody else's, but why hold assets in something that can be destroyed over a relatively short period of time when you can hold a real asset, an asset which is real money and real wealth and nature's currency, if you want, nature's money, which is gold. Plus these central banks, why put your dollars or your reserve assets of a foreign central bank into the U.S. hands by holding it in dollars, which means it's deposited mainly in the U.S. So that they have now taken the decision, all the central banks, we are not going to keep our reserve assets in dollars anymore. So there is a gradual tectonic shift away from dollars into gold. It's obviously going slowly because central banks don't want to just jump into the market and push the price up. So they're doing it slowly. But we are going to see a fundamental reevaluation of gold now, as all central banks, and so far it's mainly Eastern central banks, of course, or Southern central banks, not the Western central banks. They haven't woken up yet. So when we talk about central banks buying gold, it's not the US and it's not Europe. And as far as I know, it's not Australia either.
We're not very smart.
But instead, no one in the West is. So it is now the East and the BRICS countries, and I think that this is going to be a longer shift from dollars to real assets, to gold, that the central banks will hold at home, so that they are in control of their own central bank rather than giving it to the United States of America, that they can't trust anymore. And that over time is going to lead to a fundamental reevaluation of gold and not just by one, or going up by one or two times, but by maybe 5 times or 7 times or even more, for the simple reason that there will be a continued demand for gold that doesn't exist, of course, and cannot be produced. There's a finite amount of gold. There is some gold in the ground, not that much. And so today, the world can only produce 3,000 to 3,500 tons of gold a year. And China buys, even now, currently, the demand in China is at least half of that. And central banks also the last year or so is the other half. So already those two are buying for more than 3,000 tons. And there'll be a lot stronger demand from central banks and from many investors and from individuals. So that demand will go up many times. And as we all know then, because there's a limited amount of supply that can be got out of the ground every year, the only way to satisfy this increased demand is in price, not in quantity. So the gold price has to be a lot higher. So that's why I see over the next X years, and I'm not going to give a time period, but if it's 5 years or 7 years or 8 years, whatever, there will be a fundamental revaluation of gold by multiples from today. And that's not a gold bull speaking. It's just looking at the facts as they are today. And then you add to that, of course, the deficits, etc., that are now built into the system, and the ongoing amount of printing of money, which will be necessary for the Western world to try to survive. But they will fail, of course, but they will still continue to print. So the world hasn't discovered this shift yet, and therefore the gold. But the trend is clear. We've been into gold for almost 25 years now, in a bigger way, and gold is up, depending on the currency, 8, 9, 10 times in that period. And I think that is probably going to accelerate in the next few years. But we are not into gold for the excitement of gold going up in price. We're into gold primarily for wealth preservation purposes. And we all know that at least gold maintains purchasing power. And that will be more than any other asset will do in the next 5 or 10 years, in my view, because we have bubble assets in stocks, bonds, property, etc. And money will continue to be debased continuously because of the printing that's going to take place. So therefore, and gold will reflect that. So you don't need to buy and sell on the stock market every day. And this AI boom, for example, is also going to collapse. AI will be important, but it's not the solution to the world's problems. And it will be, from a stock market point of view, it'd be like a tech bubble in late 90s. And when the Nasdaq went down 80%. Whether the AI stock will go down 80% or more or less, it doesn't matter. It's now speculative that, and it's just like the internet stocks, and it all went up initially, but then 80%, they crashed 80%. So, as I said, that's why you have why not buy physical gold instead? You don't have to worry about buying and selling or if you hold it for a long-term period, if you hold it for the right reasons, A, it's going to be safe, B, it's going to maintain its purchasing power, and C, it will most probably in coming years also enhance your wealth because it will, relative to all other assets, go up significantly. And for example, I expect stock markets to go down maybe by 75 to 95% against gold in coming years. So, and then coming back to what you started with, Jim Sinclair, our good old friend, and I would say that he was the one who actually, I decided to go into the gold business, but he helped us by talking about what we were doing, etc., on his website, and therefore we got the attention from the gold investors, etc. And that was through Jim. And I met him a few times. He's an incredibly wise man.
Yeah.
So what people should do, what he said, and I'm actually writing about this in my article, which is coming out today, that people should create their own gold bank. And it's so simple, and there's nothing to it. Basically, you buy gold and you store it with yourselves or ourselves or whatever that is in secure vaults outside the banking system. You store it, and then in the country or in a jurisdiction that is a safe jurisdiction, and then, which I really started doing, and some people who followed us from the beginning, and now we have obviously a lot of investors around the world, but using, and many of our investors do this also. So you put, I don't have any major assets in the financial system. I believe what I preach, and therefore in precious metals, both privately and then, of course, in the company. And then, so if you create your own gold bank, obviously that presupposes that you have enough savings to do that. But if you do that, and then you just sell every 3 months, you sell enough to spend for whatever your expenses are every 3 months. And that way you are outside the banking system. So you use the banking system just for payments, and not for wealth preservation. And even, stock market investments, etc., which I think is going to be high risk or is high risk, because they also are part of the system, because if banks are custodians or financial institutions are custodians, that's a risk within the system too. And custodians can also disappear, and your securities can disappear. And a big percentage of them are in derivatives anyway, because most funds today are not in actual paper. So that's in derivatives. So that's another high risk. So that's what people should do. Create your own gold bank, put enough money there at least so you feel safe if something happens to the rest of your money. I mean, our clients have all of them, and they're very wealthy clients, but they have at least 25% in gold, and some have a lot more. Put whatever percentage is right for you. Should be higher rather than lower, because there's nothing else that can do better than gold, in my view, in coming years. Silver, of course, but that's another discussion. More volatile. And then use that as your bank account by cashing in every now and then for whatever your needs are for the next few months. It's so simple. That way you protect your wealth. You have your own little bank. No one can touch it. And you're in control of your own money, which is in solid gold.
Yeah, it's interesting when you share this sort of information with accountants, and I've been in this position many times, sitting with an accountant, financial advisor, with a client that they may have come in to the office with, and you share this information. They've never heard it before.
No.
They have no understanding at all. No understanding of how the monetary system works. The value of holding gold and described as Egon has just shared with the audience now.
Yeah, look, I've always said, and Egon, you'd probably agree, that we're 2024. If you found an accountant that was educated under the gold standard system, they'd be over the age of 70. There are very few accountants that are over the age of 70. So therefore, they only have been educated on fiat currency.
Yeah, that's right.
Yeah, they know nothing about gold, nothing about. And Egon, before I bring up this next question, which is all about about the Bank of International Settlements, before I do that, because we haven't talked about silver yet, and I know silver is more volatile, and you've got a great expression about owning silver, but what I've seen in the last 4 years, and we should bring up silver to some degree, what I've seen in the last 4 years is that the world's economy is using more silver than what we're getting out of the ground, what's going into the warehouses. So over the next 2 to 5 years, where do you think silver is going to go? I mean, it's $30 an ounce US. Where do you think it could go in the next 2 to 5 years?
Yes, silver is very, very interesting now. Now, as I said, we don't consider it to be the same degree of wealth preservation as gold.
No.
due to history and due to this volatility. Nevertheless, from the point of view of a combined investment and wealth preservation instrument, silver is very interesting now. We told our clients from the beginning not to have more than max 20% of their precious metals holdings in silver and the rest in gold. And that's been the right advice, because if you look back 25 years and see how silver went from a few dollars up to 20, down again, up to 50, down again to 10. So, that's more than most people can actually take.
Yeah, very true.
And gold is nowhere near as volatile. So that's why we told people to just have a bit of silver. But now, definitely, I mean, again, I wouldn't keep the percentage much higher, maybe than 20, maybe a little bit higher, than that. I wouldn't go all in. If you go all in to silver, you might make a lot of money, but the ride there will also mean that you will be up 50% and then down 50%, or whatever, or down 40%. And the corrections and the roller coaster ride is not for widows and orphans. It's not for most investors. And therefore, be careful when you buy silver, because when it goes up, it's wonderful, because it's going to go up at least twice as fast as gold when they go up. But the corrections will be more than twice as much down and then gold also. But right now the silver is incredibly undervalued, and the gold silver ratio, which is 80 something now, has been, as we know, it's been up over 100 in the last few years, and but the historical average is 15. In 2011, the gold silver ratio, when silver topped in the spring of 2011, silver was $50, and gold a few months later made $850. Now, I expect silver is on its way to break the $50. We were $50. Remember, investors might not know, because some of us are old, we can remember it. But we were $50 in 1980.
We were, yeah.
And silver, and then it went down to virtually nothing. So now we were $50 again in 2011. But the next time, in my view, we're going to go past $50. We'll stop there for a while and come back, maybe $10 or $7, $8. It doesn't matter. They might make just approximations. And thereafter, silver will go through $50 to much higher levels. And I would, let's say, I don't even like giving out forecasts in currency terms. I mean, it's better to measure gold and silver in chickens or bushels or whatever it is, grain, rather than a currency which is going down by the day. So everybody measures their wealth in dollars or in their own currency. And of course, it's wonderful to do that, because when all the currencies we measured in have gone down by 98, 99% in the last 50 years, it looks very good on paper. But in real terms, it isn't. In real terms, it's just maintained purchasing power. Or gold, or all currencies have gone down to nothing. But nevertheless, just to take an example, I will use paper currency because nobody knows how many chickens you need for an ounce of gold or silver anyway. So therefore, we will take silver. If gold goes to, let's say, $10,000 as an example, and that I'm not saying what the dollar is worth then, because the dollar will probably have a lot less purchasing power than today. But anyway, if we use dollars as a measure, if gold goes to $10,000, I mean, I would expect silver to be many $100s. And if you come down as far as the historical average of the gold-silver ratio, which is 15, you're talking about $666 for an ounce of silver against 10,000 gold. So the potential, that, as you say, there's the industrial demand, and then also silver is poor man's gold. So everybody who can't afford to buy an ounce of silver today at $2,500 and $10,000 in a few years' time, then they won't. But silver, of course, you can buy today at a bit over $30. So that's more, almost anybody can buy an ounce of silver. So there'll be a lot of people buying silver, speculatively, of course, but nevertheless, there'll be a lot of demand for silver. And again, as you said, there's already a shortage every year today of silver. There isn't enough silver. And the demand for silver for industrial use and solar panels, etc., will continue even if the world has financial problems, because there'll be demand for energy and for cheap energy. So yes, silver will go most probably in fiat money terms to several $100s in the next X years. So it's going to be, but again, don't go into silver. It's too risky. It's too volatile. But also for normal people, for people who haven't got wealth of a magnitude that they can preserve it for a long or period. Gold is too expensive. Okay, you can buy the 1/10 of an ounce, etc. But silver, buy silver for $30. Anybody can. It's basically a McDonald's and a bit more or whatever. Almost everybody, even people who are not having a high income, can buy silver. People have done that in Argentina a few years ago, when gold and silver were the same price, or the pesos was the same price as the dollar. Then that would have saved. I said Argentina, yeah, but Venezuela, also. That would have saved a lot of people where they saw hyperinflation, and so therefore, it's such an obvious thing. You buy, nobody realizes if they buy a piece of silver today for $30, or a bit over $30, let's say, that it goes up 10 or 15 times, or nobody understands it. But that if you buy over a year or two a bit of silver at low prices, you would have a little nest egg there, relative to your income and your wealth. So definitely people should buy gold in bigger quantities if they can afford it. Use it as a gold bank, or silver for wealth preservation reasons. Also, if you're on a more normal level of wealth that most people are, of course, or income. Yeah, so silver is very interesting and definitely worth buying today.
Backing up Egon's comments there, 1980, 1,000 ounces of silver bought a median property. Median property was 50 grand.
Yep.
And an ounce of silver was $50.
Yep.
So you need 1,000 of them.
Yep.
What a phenomenal return on your investment, shall we say there. Yeah. So, and I think it returned to something like a 15-to-1 ratio to gold at that point.
Yeah. I like what Egon said about the ratio. So you take your whole portion of precious metals and 20, maybe 25% in silver. That's a good ratio in my opinion.
Yep.
No, I've always felt that way.
Yep.
Egon, we're running out of time, and Darryl's got another question, so I'm going to move on to this one. And it'd be interesting on your answer. so let's go with it. We're talking about the Bank of International Settlements. They're suggesting that central banks should own more gold, which they claim is a strategic tier 1 asset. Should we question their motive, especially when you read their charter and statutes? Now, I'm going to show you, I'm going to put up to the camera here, an article that I think you would have written about 5 years ago. It's about the Tower of Basel in Switzerland, where the BIS is. And when I read this, it's more political than about precious metals, but I just wonder what the motive is of the BIS. So I'm going to read this out to everybody here, and then you just get to understand central banking. So it says, the BIS is a law unto itself, which means that the bank and its staff is totally immune to all laws and regulations globally. Let's just look at some of the articles in the BIS Charter and statutes. It talks about Article 3. And it says, Article 3 above states that the BIS buildings are inviolable, which means untouchable. No government representative and no police can enter the building without the permission of the BIS President and General Manager. Goes on to Article 4. Immunity from jurisdiction means that no court in any country has any power over the BIS. Immunity from execution means BIS property cannot be seized. I'll read out one more, and this is what I call a humdinger. All right, this just solves my queries about banking and central banks. It says, finally, the employees of the bank are immune from any of their actions during and after employment. Thus, these BIS bankers can never be prosecuted or go to jail. Now, what is the BIS motive of expressing that central banks should be holding more gold when they've got a statute and, their charter is based on, I can't find the word for it, but what's your thoughts there, Egon?
Well, yeah, it is frightening when you reread that. It reminds me of the vaccine manufacturers, of the COVID vaccine manufacturers. When it suits the powers that be, and it suits people politically, to do something like producing unlimited vaccines around the world, or in the BIS case, for some entity to control part of the financial system, then they get immunity, like the vaccine manufacturers did. They got immunity, which is criminal to give them immunity. But anyway, that's what happened. And here, you're talking about it, which is. But BIS is incredibly political. Of course, it's the central bank of the central bankers, and this is where the central banks meet normally once a month, maybe not always, and they are known, and they admit it themselves also, as major gold manipulators. They often in the past have interfered in the gold market. Now it suits them because to recommend gold for the banks, because they see why things are going, and they see that currencies are going to collapse, down 99% almost already in 50 years. They're going to go down another 99% from here, in my view, and therefore, central banks cannot ignore the fact that their fellow central bankers, and especially now when they have Eastern central banks and Asian central banks, BRIC central banks, everybody buying gold, they realize now, we can't have a dollar system, and therefore central banks should now hold gold to protect their assets. So they see what's happening, and that's why now they're telling people you must own gold, because otherwise you have no assets left in the next 10 years or so, if you just hold dollars. So I think that's the shift, similar to what we talked about before. Everybody's going to move from dollars to gold as a reserve asset. So it rhymes. I mean, they're not, they can't look totally stupid by telling people now, no, don't hold gold because the dollar is what we should hold. And therefore, they see that gold is going to go up dramatically, also because of what's happening in the world now, which we have discussed in this interview here. And therefore, they've got to, at last, follow the flow and start thinking about central banks all having gold, and that's what's going to happen. And that again confirms what we said before: central bank will hold gold, and gold will be revalued by multiples. There is no other way to satisfy the massive shift in trend that's taking place and will accelerate in the next few years. So that's a good thing. But they're not, they're no saints. The BIS people, their purpose is to really try to control the gold market, and they've managed to keep it down for many years. Some people don't believe in manipulation of gold, but I mean, the central banks and the BIS have admitted it many times that they had to intervene and keep gold down, and they do that obviously through the bullion banks. So and now they're actually going to be part of the crowd that plows into gold and recommends it to others. So this is why we're going to see gold moving up by multiples. I'm absolutely convinced, and I hope it just will be an orderly market. It's never good if gold goes up too fast. But central banks are normally clever in that way. That, as I said before, they'll always do it gradually, and they're not going to rush in to buy gold in any way.
Yeah.
So that supports what we were talking about before. Of course, you can be surprised that BIS says this, but they're not stupid. They're jumping on the trend. They're jumping on the trend, like everybody else. They see what's happening, and they don't want to be left behind.
Yeah. No, sounds very, very true. True words. Darryl, I think Dad, our father had a very good saying for something like the BIS.
What was that?
It was, I think they're feathering their own nest.
Oh, yeah.
And it's very, very true. I mean, they've been pushed in this position now that holding gold is a good thing. But yeah, they will own a lot of gold themselves. Those members of BIS and other central banks and larger banks, they'll be having gold, a lot of gold. Yeah.
They earn tax-free money, everybody working for obviously for the BIS. And they earn tax-free money, and they buy everything tax-free also. So it's a wonderful job to have. They will now see to it that they're going to benefit, as you say, like everyone else, because they have always at their lunches or dinners. They have the best food, the best wine. They have a wine cellar, which is incredible of top wine. So they know how to look after themselves. They need gold to pay. Only gold can pay for that, because otherwise it would become too expensive in paper money.
Like, I had another 32 questions to ask Egon, but what I'd like to, and I think I'll ignore those, but the interesting thing here is, and this is fact, and we can sort of close on this, just supporting what we've been talking about. Gold over the last 23 years, as Egon said, it's up about 900%, right since the turn of the century, 900%. So let's just say that in the year 2000, you'd put $200,000 into gold and just sat on it. As we all know, there are no council rates, there's no stamp duty, there's no maintenance, there's no nothing. Right. All one needs is for maintenance is a feather duster, and we've acknowledged that. Right. So let's look at this. You've got the 200,000 is now $1.8 million.
Yeah.
I believe that the economy is in a much worse state now than what it was or has been over that 23-year period. It's just getting worse and worse and worse.
Yeah.
So we can expect gold to perform even better in the next 23 years than we've seen it perform in the last 23. So just think about this for a moment. You've got 1.8 million you want to liquidate. We're talking about you want to retire. You could liquidate at 20% per annum right? 20% on 1.8 million is what, $360,000 a year. Today, you can start liquidating at $360,000 a year, and you would have more value in your portfolio. Your portfolio would be worth more year after year after year after year, because you'd be liquidating at a lesser rate than it would be appreciating. I mean, what a position to be in.
Yeah.
And that's what you could look forward to with gold, say, over the next 3, 4, 5 years, right?
Yeah.
Just to be in that position. So,
as JP Morgan said, gold is money, everything else is credit. So that's exactly what's happening today.
Yep. So once again, Egon, we've been speaking for an hour or thereabouts. Time always flies with you. It is quite incredible. But what I'd like to do is, you've got a vaulting service, and everyone who's been listening to this interview this evening would have to be absorbed in everything that Egon's talked about.
Mm-hmm.
You have a vaulting service. Could you please explain to our viewing audience how that works, how they could make contact with yourself, and how the process takes place, if they're interested in vaulting with you?
Certainly. First of all, I like your example of the pension pot there. But when you said over the next 23 years, that just concerned me a little bit, because I'll be over 100 then. So I have to draw it faster. Anyway, yes, we set up this company initially because, as I said, I saw the risks in the world. I was worried, and we were advising a number of high net worth individuals, and so we designed this for ourselves, for our own family money, and then for the people we advised also, by finding the best vaults to store gold outside the banking system, and buying straight from the refiners, and obviously insuring it, and eliminating all counterparty risks. So we're not even a counterparty ourselves. So you should always try to have as few counterparties as possible. And so we don't have anybody in between us and the gold. The client holds it in their name directly and can't take the gold out even without us. So we do that for people who are high net worth individuals. So we have a relatively high minimum of $400,000 in our Zurich and Singapore vault, and then in our mountain vault, which is the biggest gold vault in the world and the safest private gold vault in the world, the biggest and safest also, which is like a James Bond experience, and you still have to come and experience that, you guys. But there we have a minimum of 5 million. It's very high, so obviously not for the average investor, but nevertheless for people with bigger wealth, it is an absolutely unique experience, and the most secure vault you will ever find. So that's what we do. So we help people. We transport also gold from all over the world to the vaults that we use for our investors. And that's an important part of our service also. People cannot transport things themselves anymore. It's become incredibly complex to transport precious metals, for example. But we do that on a daily basis, so we can take care of that for anyone who wants to shift the gold from wherever it is now, or silver for that matter. So it's very simple. We have a very experienced team of executives and managers in the business who look after people, by hand-holding them and taking them through the process of compliance, etc., which everybody has to go through today to open an account with us and buy their gold or transfer their gold. And people who want to contact us can just go to our website, which is the name is really vongreyerz.gold, but the easy that's hard to spell for a lot of people is vg.gold, vg.gold. But the old URL or website name goldswitzerland.com still works also. So and people contact us or give us a ring or fill in the form there, We really give a very, very personal service. That's what we're all about. But people have less money than that. We work with partners, well, obviously people like yourself in Australia or other people in Europe for smaller amount. So we perform a function we think are extremely important, and you do exactly the same. And that's why we both, or all three of us, have a real passion for what we're doing and helping other people. And that makes it very exciting.
That's why we're still doing it.
That's why we're still doing it. Yeah. It's not a job, it's a passion.
No, absolutely. At this point, and it's a shame to have to say goodbye, but a gentleman by the name of Charlie Tremendous Jones, many years ago, and we always finish by reminding everyone of this, said, in 5 years' time, you'll be in exactly the same position you're in right now, apart from two things: the people you meet and the books you read. So if anyone was viewing tonight for the first time, they've met somebody, they've met an Egon von Greyerz, they've had the opportunity to listen to and become wiser in the process. That's what life is all about. Charlie Tremendous Jones was correct. We would love to thank you again, Egon, as we always will. It's just fantastic that we've had this relationship over a number of years now. We've been able to continue to connect with you and just become smarter people ourselves in the process. So thank you once again for your ongoing contribution. And I guess to all of our viewers and subscribers, thank you so very much for continuing to support this channel. And so until next time, let's all stay well and stay focused. Goodbye for now.
Goodbye for now.